Welcome back, friends. Over the last 2 weeks, I had published a series of videos explaining how the US markets were overvalued, how Nvidia was far out of its normal valuation, and a steep correction lies ahead for both the US markets and Nvidia in particular. It was a bold statement, a bold prediction, and I was held to great ridicule. I was made a laughing stock that with such fantastic growth prospects, how you could say that Nvidia would correct. It is only pricing in the high growth rate and its chips are not even available, then how you can say it will correct? Friends, for months we have been witnessing an ideal set of conditions, an adorable Goldilocks economic expansion, enough global disinflation to constrain bond yields in a benign range, lavishly generous credit markets, and a clear upturn in earnings growth might be enough to explain the S&P 500 hitting further record highs last week and logging a 25% gain since last October. And that's not a small number or percentage by any means of imagination. But on top of that rich bounty, the Federal Reserve seems prepared to start trimming the policy rate by summertime. That's what now they are indicating from their various statements from various Fed chairmen. And they are exercising a well-earned prerogative to normalize the rates in economic peacetime, which talks at a record rather than fight a battle against a macro downturn with markets under stress. So you can call this scenario as a soft landing, so as to say. With all that though, Friday's market action has furnished a tentative hint that the rally might have reached one of those enough for now moments where the prices and attitudes catch up to and possibly surpass the pileup of positives. After an early pop, and it was quite a good pop. If you go and look at the chart of the Dow, S&P and Nasdaq, it was a good pop. Following a just right jobs report of February showing moderate employment growth, rising labor supply, and decelerating wage gains, the S&P 500 was jolted by some of the market's fastest horses breaking stride. Nvidia unwind, so as to say. The headlong aggression of momentum stock buyers in recent weeks has been one of the few decent reasons to expand this sturdy, tightly ordered rally to start trading a bit more loosely and unreliably for a time. While only one day's action, the severe Friday reversal in Nvidia shares from up 5% to down 5% within 6 hours on an eye-watering trading session. With eye-watering trading volume was a fitting preview of what a potential momentum unwind could look like. These are a new generation of momentum traders who have joined the bandwagon, and they are yet to see what happens when the momentum wind down takes place. They have only seen the wind up. This is what I was referring in my videos over the last 2 weeks as a melt up before the meltdown. And there were people to write in the comments, only melt up, Sunil Keval Ramani, no meltdown. I said, wait and watch. You have seen a trailer on Friday. The headlong aggression of momentum stock buyers in recent weeks are still there, but they have received a jolt on Friday. Those who think, and why I could see so. Every time you talk with somebody, those new generation, the Generation X, the millennials, they were talking, this time is different. The artificial intelligence story is here to stay, just like the internet story is here to stay in 2000s. But just like Cisco got hammered, we may see Nvidia as well. Still, I am sure this video will meet with lot of jeers, and I always have trollers after me. I don't know why I'm the center of attraction, but watch it out, they are still there. Nvidia has been the speedy flagship of this exuberant AI theme, adding $1.5 trillion in market value in the past year and last week, coming within sight of Apple's weight within the S&P 500. As many enjoy pointing out, Nvidia's valuation has come down over that span from 60 times forward earnings price earnings ratio to 34 as revenue and profit projections have exploded. Now that's reassuring as far as it goes, though at some point the market will start to express doubt over the long-term sustainability of these growth rates through a less generous price earnings ratio. If you dissect the Nvidia numbers also, you will find that there are some segments where the guidance is showing slower growth in the quarters ahead. Even though the likes of Amazon and Tesla are more highly valued, we have no other precedent for a $2.2 trillion market capitalization company, Nvidia's current size that is, and sustaining a 34 times forward price earnings ratio. Relevant or not, the stock at Friday's high touched a trend line going back more than 6 years, connecting short-term highs from early 2018 and late 2021, lending some credence to the enough for now idea. That is, if you look at that trend line very, very closely, you will notice that trend. The main characteristic of Nvidia lately has been as the largest beneficiary of a relentless momentum factor trade, buying what's working best and shunning the laggards. In countries far away from the United States, such as India, you find people trading in Nvidia as if there is no tomorrow. And there's a young generation who has been caught trying to invest like crazy after cryptocurrencies and Nvidia. And this is something you realize that now these stocks, these asset classes have come on the radar of such a huge generation. A generation has changed and a new class of investors have come on the scene to be able to rattle the whole market with their money power, with their newfound money. It's a feature of the market that extends beyond semiconductors and even tech in general. Within retail and staples, Costco has gone vertical relative to the sectors until, of course, Friday. So that means all the risk assets had to get it. In pharma, it's Eli Lilly to basic materials. You have Martin Marietta Materials and Vulcan Materials. The long-term chart from shows that a percentage of S&P 500 market cap attributable to the 100 highest momentum stocks of the prior 12 months looks pretty mixed, pretty maxed out. Okay. This is part of the case for expecting some turbulence, a reshuffling of market leadership, perhaps even a nice pullback at some point. And yes, there is a little steam left in the rally, I repeat. But when that big fall comes again, it will be nasty, shake you badly. And Nvidia will also not go untouched. Mind my words. So we have the S&P 500 volatility index has finished the week near 15 and is in a clear 3-month uptrend from its mid-December low near 12, even as the S&P 500 has gained 10% since then. Hedgers and speculators are attuned for a possible break in the calm or perhaps simple accounting for a higher velocity in times to come. And yet, all of that said, nothing in Friday's wobble or the overall setup suggests playing for a radical change in market tone right now or with high conviction. In fact, Friday, the market minimized the headline damage to a mere 2/3% dip in the S&P 500, although its signature rotational impulse said something more. Laggards Apple and Alphabet perked up in the momentum. Unwind, up-down volume was evenly split and consumer cyclicals held firm. There was 674 new 52-week highs across the NYSE and Nasdaq against 110 new lows. Just about all the trend indicators are reassuring if extended. These include the market's admirable ability to stay persistently overbought without even a 3% setback in the last 4 months. Confirmation from strong global equity indexes, the equal weight S&P 500 in the mid-cap benchmark making new record highs. Across the world, you see new record highs. But whether Nvidia, the poster boy of artificial intelligence of this new rally starting in late October, of course it's been going for the last 2 years, but the sudden substantial headlines of $2 trillion plus economy, whether that's going to get upset, watch out. To learn more, please do join our Prime or Prime Plus groups addressed to the US markets. You can WhatsApp us on 982-086-1044. You can alternatively also email us at globalmoneyinvestor@gmail.com. globalmoneyinvestor@gmail.com. We'll tell you when exactly the big fall is coming. Till then, hold the horses, but it's coming and coming very quickly. Warn you, that's my prediction. That's coming in very, very quickly.